Good morning and happy Wednesday. Welcome back to the Daily Grind. I'm your host, Chum Change. This is live and recorded. For those of you that might be new here, what we typically do is go over crypto news or news in general in the space. I update myself, bring you guys along for the ride. Let's see who's in the house. Then we'll get into this. Mr. Andrew Masad, good to see you. We got Dom G, Kyle Rosa, Steven Cicero, Crypto Frank. My man says, let's go. Good to see you, Virgilio. Good to see you as well. Carl Coate. Let's see. Black Hat Team. Good morning. Dom G. Everybody else I may have missed, I apologize, but let's get into this. All right, Bitcoin, 59,978 bucks, just under 60K. Look at that. I think we broke 61K yesterday briefly. Ethereum at 2308. Ethereum's been really underperforming. Let's say that, but whatever. Solana, $129. Let's see, XRP 57 cents, ADA 33 cents, LTC is at 63.77, Caspa is at just under 17 cents actually, 16.95. We have a Near Protocol over here just under $4 at 3.99. Let's see what else. ETC $17.68. Dogecoin is at 10 cents. Let's see, BNB is at 542 bucks. If anybody cares about that one. Toncoin is at $5.55. Not too bad. Not too bad. All right, jump over to Crypto Bubbles. Let's see what's the biggest loser of the day. Looks like HNT. Bruh. Down 6.4% on the day. We got $6.59 per coin. Let's see, CKB looks like it's the most profitable today, or up the most today. 5.3%. A penny, over a penny and a half in between that and 2 pennies. Interesting. I know Nervos Network had a huge pump randomly the other day. It was like, yeah, it was up a shit ton actually, if I'm not mistaken. It was a couple days ago actually. Weird. Render's actually down 3.1% today. Might be a good buying opportunity. I'm sure people are selling in lieu of they're changing their ticker or something. I think they went to actually no, they went from the Ethereum network to the Solana network. That's right, if I'm not mistaken. Am I wrong on that? Actually, let me know in the chat if you guys know. But we all got an email over from Coinbase, so I believe that's what it was. So they changed the ticker to Render instead of RNDR like it was, and I just sold mine. I figured I'd just buy back in later instead of swapping it out. Let's see, Piranha Cards. I always call you Panera Cards. I don't understand why. Piranha Cards, good to see you, buddy. Good to see you. Thank you. Yes, hit that like button. Appreciate you for hanging out. Good morning, everybody. It's been a while. Hope everybody is doing well. Doing great, except for like being super tired and having a sore throat. These kids are like walking cesspools when they start school. Everybody sick. It's awful. My throat is killing me today. Over here, Maker down 4.9% to $1,456. Not too bad. Let's see, nothing else really jumping out at me, to be honest. Over here, I'm just tired. That's about it. BitTensor 318 bucks. Man, this was $2.99 the other day. This one moves up and down quite a bit. It's up 3% today. All right, Flashbang. Let's see, we got a Fear and Greed index of a 45. Again, this is an overall consensus of the entire market, news, everything, right, all kind of lumped into one, and it's yeah, it's climbed up to 45, assuming because Bitcoin was over 61K yesterday. It was a lot of bullish sentiment right behind it, but today I'm assuming we're gonna have a little bit of a pullback, or tomorrow rather, we'll have a little bit of a pullback on this needle, but we'll have to see. What happens there. All right, top 10 coins by coin market cap over on CoinGecko. We got Bitcoin, Ethereum, Tether, BNB, Solana, USDC, XRP, Lido Staked Ether, Dogecoin, and Toncoin in 10th place at a $13.9 billion market cap. We got Troncoin in 11th, and Cardano's in 12th place at $11.8 billion market cap. We have to see some price appreciation in Cardano. Killing me. Actually, all these coins have been hanging on forever. But yeah, anything that's over 80% down, you guys know I'm investing in. LTC is 24th place on this top 100 list. We got Near Protocol in 25th and Caspa in 26th. These 3 coins I think are going to do fantastic. Caspa is the only one that's not down over 80%. This is obviously never seen a bull run, and KRC20 mainnet launched Sunday, so still some hype around it. We're gonna have to see what happens. I guess it's like a KRC21 or something coming, NFTs and stuff. Mr. DJ Mines was talking about. Mr. Max Voltage, Hadouken to you, sir. Good morning. Good morning.
Perfect.
Steven Cicero. I know you like to do that in your off time, but I do not. Jesus Christ. All right, moving on to the mining segment of things. Look at this, the Bitmain Antminer AL1 Pro. You guys know I like to timestamp this stuff so we can go back and look, see what these units were. 16.6 terahashes over here, $86.02 a day. Bruh. Damn. Before I refreshed this page, before I went live, it was $96. It dropped $10 from yesterday to today. Crazy. AL1 15.6 terahash unit over here, $80 a day. We have, let's see, let's check out the network hash rate real quick. So 12.47 petahashes right now on all these pools. Yesterday it was at 11, so it's jumped a petahash. It has jumped a full petahash. I think it was like 11 and a half yesterday, if I'm not mistaken. Actually, let's check the price of lithium because I don't know. $1.67. $1.67. I guess it's kind of fallen off. I don't know. It's just progressive drop in price, obviously, from mining and selling. People trying to get profits back from spending $40,000 on the Bitmain unit, and yeah, probably not being too happy about Ice River dropping this price, so they're trying to sell as much as they can to get their money back, which is totally understandable. All right, Ice River AL3 15 terahash unit. Again, this thing's listed for like 12 grand. These ones were like 40, and they're like the same hash rate. Oh, it's so sad. It's friggin' insane. 3,500 watts over here, making $77.42. We got the Dragon Ball Miner A11 3.2 terahash unit over here. This is the Radiant Miner, $52.54. Man, I guess they were the entity, if I'm not mistaken, right? Is that what the deal was with that? I never really actually found out. Jafar, good to see you, man. Thanks for stopping by. Red Roo Mining, I love that name. I need my BTC. What's up, buddy? Good to see you. Good to see you. Let's see. Just realized you were rocking the Under Armour. They're saying, yeah, it's not too chilly out. It's not too cold down here in the basement, which is nice. Let's see. We have the Antminer KS5 Pro 21 terahash unit over here, making $31.20 a day. That's actually not that bad. I feel like that's more than it was. Am I wrong? KS5 20 terahash unit over here, making $29.71. Interesting. The Gold Shell E AL1M 4.4 terahash unit, 1800 watts, $20.85 a day. Man, I really wish they would get this wattage down. Like, why is Gold Shell so inefficient compared to everything else? I mean, I like Gold Shell, but damn, like, they kill the friggin', this, the efficiency is awful. Ice River KS5M over here, 15 terahash unit, making $19.52 a day. We got the L9 Litecoin and Dogecoin merge mining. You can actually triple mine on this, if I'm not mistaken, with bells. $16.05. Not too bad. Let's see. I'm just gonna scroll down a bit. Actually, the KS5L, is this the one that's on sale? If I'm not mistaken, it's like 2 grand right now. 12 terahashes, 3,400 watts, $13.99 a day. That's not too bad. It could be worse, right? 2 grand. I mean, I would say just buy the coin, but buying the miner, if you guys have an itch, it's really not a bad deal, I guess. But at the same time, it's like, how long until it's a brick, right? If the KRC20 thing or KRC21 thing doesn't really hold up with the mining rewards, then those things are going to be really rough to run. The Bitmain Antminer L79050, you guys know I got mine down at Terra Hosting. Shout out to them if you guys are interested in hosting. I pay 10 cents per kilowatt hour down there. It's way cheaper than my 30 cents here, but I'm making $5.42 a day on this unit. And again, this thing's been profitable the entire bear market, so I can't complain. The L7's been amazing, and shout out to Musk Miners because they're the ones that actually sent that thing over to me a couple years ago. Gold Shell AL Box 2 Plus. I got this thing running in the solar trailer. Actually, I left all of my Alethea miners up last night. 1050 watts. I ran completely all overnight. I went and checked my batteries this morning right before I started the stream, and they were at 40%. I was like shocked. Way over 40% actually. It was like 42, 43. So it wasn't bad at all. Actually stunned I was able to run that much overnight, no problem. Let's see, scrolling down, Ice River AL0. Actually, I have a video dropping right after this live stream showing you guys that you can put these on Wi-Fi, which is pretty cool. 400 gigahashes at 100 watts, $2 a day. Could be worse. Damn, these things are, you guys remember when this thing came out? Oh no, that was the AL box I'm thinking of, but this was like These are like 10 bucks a day or 9 bucks a day when I drop my video. Damn, that's like a fifth of that now. Insane. Bruh. Insane. All right, we're gonna jump into the news in a second because my throat is killing me today. The S19K Pro though, I wanted to look at that. I'm losing 75 cents. I'm losing 75 cents on this thing still per day. Brutal. We need Bitcoin to pump. All right, jumping over to GPUs. Then we're gonna move over. Aleo, what the hell is this? Is this what Panda was streaming yesterday? Jesus Christ, it took over the whole chart. Oh my god. Let me see. More shit coins. Shit coins everywhere. How do you spell it? I'm wrong. Is it ALEO? Is it not listed here yet? Oh god, sorry. It's not listed on CoinGecko yet. It's barely listed here. Yeah. I'm not chasing shitcoins for no profits. Trying to hook up to a shitty exchange to sell it. No thanks. Not worth my time. That's not worth my time, but there you go. There's a shitcoin of the day. Aleo or Aloe or however the hell you're supposed to say that. I don't know. Anyways, all right, let's move on to the news segment of things. I got a few things I want to watch, and the video today is quite long, so that'll save me a little bit. All right, why crypto fintech are well positioned for an interest rate cut. Let's see what they got to say over here on Yahoo Finance. Let's do it.
Bitcoin hitting a 3-week high today as the crypto industry reacts to the Trump family's new platform, World Liberty Financial, and braces for tomorrow's rate cut decision from the Fed. Joining us now is Devin Ryan, Citizens JMP Director of Financial Technology and Research. Devin, appreciate you joining us in studio today. I mentioned off the top there, just Bitcoin at a 3-week high right now. What have you sort of been watching from trends within the crypto space now, where demand seems to be at for the crypto industry as a whole?
Yeah, hey Josh. So I would say it's been a volatile, obviously, last month or so here. So we hit highs a little bit over a month ago in the low 70s and have come under some pressure. There's kind of two things going on. There's a macro conversation, and I do think that ahead of FOMC potentially lowering rates here tomorrow, that's going to be bullish, and so you're starting to see some positive move into that. And then there's also the kind of the political conversation, and with the Harris administration potentially gaining ground here, and there's not a lot of certainty around what an administration from her will look like. That's created, I think, some volatility in the space as well. So I think with getting on the other side of a rate cut, that's going to be one positive catalyst, and then getting some more clarity from a political perspective is going to be another one as well.
So tomorrow, Devin, we get, let's say we get a cut, we get dovish confidence guidance, we get dovish Jay Powell at the presser. You think Bitcoin reacts how?
Yeah, I think it's positive. So you take a step back, you look at risk assets, you look at, I cover fintech names and crypto names, and fintech has been under tremendous pressure over the last 2.5 years since the Fed started raising rates. Basket of companies we look at's down 50 to 75%, and I would say Bitcoin's done well for different reasons. When we get a cut, which it looks like we're going to, that is kind of more of a risk-on condition. And so we do think that's going to be good for the crypto ecosystem, probably drive more transaction activity. And then you can look at some of the fintech names as well, like a Robinhood, where we expect there's going to be more transactional activity. Retail engagement picks up generally in a lower rate environment as well.
And with the fintech space, how do you sort of think about it from a cut standpoint? There's a case where you get more cuts because the economy isn't doing well, right? Yep. And I don't know if that's necessarily a positive catalyst for fintech. So if you're an owner of one of these stocks, should you be rooting for more cuts, or maybe a few less cuts than we're looking at right now because it means the economy's doing well?
Yeah, it's a great point, Josh. I mean, it's the conditions around why you're seeing cuts, and you need a softish landing. That's what's going to be constructive for risk assets, not just the fintech stocks. But I think if that's the scenario, which right now is kind of more the narrative, I think, in the market, lower interest rates will be good. The other thing that's important, if you look at, as I talked about, there's kind of been this inverse correlation with fintech stocks and interest rates, because the fintech stocks that we covered 2-3 years ago were not profitable. And so companies that are higher risk, that when they're losing money, you essentially, those companies have to borrow at very high interest rates, and so therefore, their cost of capital is higher. They're going to react negatively to higher interest rates. What's happened over the last 2.5 years, very interesting, is some of the really good companies have continue to grow revenues, they've cut expenses, and now they're profitable. So I think that risk has really been diminished. And so those companies, their stocks are up 100%, 150%. They're still not back to where they were at the kind of the 2021 highs, but the stocks that have not gotten to profitability in the fintech space are essentially still around the lows. So I think that just shows that there's been this divergence of both performance in terms of fundamentals, but then also why the interest rate piece matters. I think it's going to matter less because some of these companies have gotten to profitability, and so they've de-risked their future, and so therefore their cost of capital should be coming down.
Interesting. All right, moving on. Yahoo Finance again. Bitcoin could swing to 125K if Trump wins. Hadouken. Let's do it.
After several months of downward movement, Bitcoin may be poised for a historic post-election rally. A new report out from Standard Chartered says that a Trump win could fuel Bitcoin to new heights by year end, though the largest cryptocurrency should see all-time highs regardless of the election outcome. So,
real quick, how do you guys feel about the whole mail-in ballot thing? I got one of those things in the mail yesterday to like fill it out and send it in so I could get a mail-in one. I still don't understand why they're doing that when it's just like, I feel like it just enables things to be messed with during the whole voting process. Do you know what I mean? Why can't we just actually have it like on a ledger, a digital ledger, and everybody just logs in and votes? That can't be like corrupt, right? I don't understand it. It makes no sense to me.
Just how high could Bitcoin go? Let's bring in Jeff Kendrick, who is the head crypto research at Standard Chartered. All right, take us into what the expectations are here in either outcome for the election, for at least the top seat in the balloting.
Absolutely. Thanks, Brad. So I sent a report the last couple of days. I think we go to fresh all-time highs by the end of this year, no matter what happens in the US election. It would be relatively clear that a Trump presidency should be more positive, given he's been relatively constructive on Bitcoin in particular, but also the broader digital asset space over the last couple of years. So in his victory scenario, I predict we go to 125,000 for Bitcoin by the end of this year. In the Harris scenario, again, I think we do go higher, but to about 75,000 by the end of this year. And that's because Harris is...
75K is still good. Least likely scenario, I would say, I hope. But 125 seems like a lot before the end of the year.
Definitely not President Biden. So President Biden has been quite negative on the sector the last few years. Earlier this year, in May, President Biden vetoed the SAB 121 repeal bill that had passed through the House and the Senate. So I think now that the sector has become politicized, if you like, it'll be very difficult for a then President Harris to do a similar repeal to what President Biden has done. So again, a somewhat positive story, but a much more positive outcome in a President Trump 2.0.
And Jeff, we know,
I mean, getting a 2x in like the next 3 months, that seems kind of unlikely, to be honest. I'm thinking more probably into 2025, we're going to see over 100.
that former President Trump has been supportive, or saying that he will be supportive if he were to be elected. I'm curious how you view...
I feel like this lady's voice is always so loud. Is it just me? Or does it get like way louder?
...that then playing out on a regulatory basis, and how then we get, or how quickly we could get, if it's to 125,000 by the end of the year, then what does 2025 look like?
So markets will normally run ahead of themselves, which is by the end of this year, we'll have no changes, of course, because President Trump 2.0 will only take the White House in late January. But markets will be looking forward to a few likely outcomes. The first very likely, I suspect, will be the removal of SAB 121, which restricts some US banks' dealings in spot and other custody type issues in the digital asset space. So I suspect that will go. I think it might go anyway under Harris, but almost certainly under Trump. You'd very likely see a change at the top of the SEC. The SEC under Gary Gensler has been also very negative on the sector in the last few years, although we did see a little bit of a pare back of that late last week around the security type issue. But that probably would be removed as well. You'll probably see more ETFs relatively quickly. Solana, I would say, would be the most likely third one. So that's probably the big ticket, let's say, regulatory changes. And given what's happening more broadly in other asset markets, I suspect it makes sense to be buying Bitcoin and other digital assets anyway. Specifically, you've now finally started to see the US Treasury curve, albeit very, very slightly. 10-year yields are above 2-year yields for the first time for a number of quarters now, and that's a marginally positive story. Within that as well, you've got inflation expectations up a bit, whereas real yields are down a bit. So again, that should be helping at the margin. And I suspect next month, we'll probably also get a more positive outlook on the ETF inflows to Bitcoin, which have been very, very soft through the summer months. For about $17 billion so far this year. I suspect those inflows pick up again into the fourth quarter. So each of those stories should see us higher. If it's a Trump victory, quite a lot higher, up to 125 year end. Next year, I think 200,000 by the end of next year, no matter who's in the White House.
And then Jeff.
Wow, 200,000 next year, but no matter what. Like who's in the, depending on, he said it doesn't matter whoever's in the White House. That's crazy. 200K next year. What do you guys think? Do you agree with that? That's really bullish, to be honest. I don't know.
Just with the Fed expected to cut rates next or tomorrow, excuse me.
Let's get over 100
How
first.
Does that then just bolster the case? And I guess how much of that then is going to fuel some of this optimistic outlook?
It definitely helps. So finally, the Fed are going to join other central banks and start cutting rates. Obviously, the market's expecting 50 basis point tomorrow. Your previous guest, Eric, was talking about the detail of that. Clearly, the detail will be important for digital assets and Bitcoin specifically as well. I'm watching what the 2's 10 curve does. So if the 2's 10 curve steepens up more than it is now, and so by which you'd probably need the Fed to cut 50 and guide the market to continue to expect a lot of rate cuts over the next number of meetings, you'll probably see that yield curve steepen up. And normally, a slightly steeper yield curve is better for Bitcoin and other digital assets more broadly.
If I heard you,
Yeah, I'm with you, Andrew Masad. He said, I think it will be short of 200K no matter what. Yeah, I don't think it's going to get that far. I think let's break 100K first, and then we could talk about maybe the 200 mark. Like, I don't think it's a good idea to claim it's going to get there, right? It just doesn't make sense to me.
correctly a moment ago, you just said 200,000 by the end of the next year, no matter who wins the White House. So why the immediate dispersion, at least in the modeling, where you're seeing 75K by the end of this year under Harris win, and then 125K after in the case of a Trump win?
I suspect the market will initially sell Bitcoin on a Harris victory. I'd be a buyer into any dips, but I suspect the market may be negative on what a Harris administration might do, given where the Democratic Party has been for the past few years. But I suspect the reality, once she was in seat early next year, might actually end up being okay for the industry.
Yeah, it's the initial scare. I think that's what will sell off, Bitcoin. But yeah, I think it would be fine too.
We'll probably still get changes at the top of the SEC. We'll probably still get some of those regulations like SAB 121 removed. We'll probably still get some ETFs. So market expectation, let's call it for the first 3 to 6 months post-election, could be negative in terms of what she's going to do, but I suspect we'll actually end up in the same place anyway. Because by
that would mean the 4-year cycle is completely screwed.
The end of next year, I'd expect ETFs, SAB 121 gone, etc.
All right, if it was 3 to 6 months after the post-election, that would be awful. If it was that bad. I don't know. We'll have to see. I think it's going to be worse with her though versus Trump for crypto, initially for sure. Trump-backed crypto platform announces new details on token offering. Let's see what they got to say over here on CNBC Crypto World. Guys, the like button, please. Appreciate you for hanging out. Hate asking, but YouTube makes me. Let's do it.
Today, Bitcoin pops to the $61,000 level amid a broad crypto rally. Former President Trump rolls out new details about the crypto project he and his family are backing. Perfect. And we're on the ground at Future Proof 2024 in California, where Bitwise's Matt Hogan lays out how investment advisors are warming up to crypto. Welcome to CNBC's Crypto World. I'm Lindsay Jacobson. Cryptocurrencies green across the board, recovering after yesterday's dip. As of noon Eastern, Bitcoin jumped 5.5%, crossing the $61,000 level. Ether rose more than 4% to nearly $2,400, and Solana trading at $134.66.
Again, that was yesterday afternoon.
Okay, let's talk about today's top story. The team behind World Liberty Financial, including former President Trump and his sons, disclosed new details about the DeFi project, specifically plans to launch a WLFI token and how it would be allocated. Zach Folkman, a business partner on the project, said that 20% of the tokens would be allocated to the founders, including the Trumps, 17% for user rewards, and 63% for the public. This is at odds with earlier reports that suggested a founder's share of 70%. This would be a Reg D offering, which is an SEC rule that lets smaller companies raise funds under certain conditions without first registering with the agency. The group also suggested the DeFi platform would be a place for the public to borrow, lend, and invest in cryptocurrencies. Last night's event kicked off with the former president discussing how his interest in crypto has grown over time and the perceived hostility from the SEC towards the crypto industry. This comes as Trump is positioning himself to be the pro-crypto candidate in the 2024 presidential election. His opponent, Vice President Kamala Harris, hasn't made public statements on crypto yet, but is
She wearing like regular sneakers? Didn't like dress up? The hell?
reportedly warming on the issue and has the backing of some of the industry, including the Future Forward PAC that began accepting crypto donations last month. Trump's
I guess you can't see him behind the podium, so who cares?
campaign has been accepting
It's
crypto
like wearing shorts at a Zoom meeting. Nobody knows because they can only see from here up.
donations since May. Total crypto spending on the election has surpassed $190 million, with the Winklevoss twins leading in individual contributions at more than $5 million each.
Jesus.
They announced their support for Trump back in June. We reached out to the Harris campaign about Trump's recent
didn't
crypto
comment.
endeavors and asked about the vice president's crypto stance, but didn't immediately hear back.
Which means they didn't hear back at all.
Right, for our main story, let's turn to Future Proof 2024 out in Huntington Beach, California. Crypto World's Tanea McKeel is on the ground at the event for investment advisors, and she caught up with Matt Hogan, CIO of Bitwise Asset Management. Hogan shares how advisors are warming up to crypto and how the 2024 election could affect prices.
I'll bump this up a little
Matt
bit.
Hogan.
Yes.
It's great to see you. Thank you so much for joining us from this beautiful event here in Huntington Beach. This is an event geared toward advisors. How is it going for you? There's a smaller, I think, crypto presence here, just walking the tents, than at an actual crypto-focused conference.
Yeah.
And I'm kind of wondering how reflective that is, and we'll get a little bit into this, of the investor space and their views toward crypto. So how's the event been so far for you?
I think it's been great. I think that tells you is that crypto is being normalized, right? We're in this era of ETFs. Crypto can stand side by side with stocks and bonds and real estate and commodities and other alternatives. And that's what you see here. The crypto tents look just like the Morningstar tent, looks just like the Bank of New York tent. It's part of the evolution of the industry, and it's been a great event for us so far.
Earlier this year, you spoke at another event, and I'm sure we've talked about it as well, but the conversation with advisors and institutional investors, you spoke about it not being about whether Bitcoin is going to 74K again or if it's sliding back to 40K, but rather, a question of whether or not Bitcoin is going all the way down to zero.
Right.
It's not been a year, but has that evolved just, with the launch of Bitcoin ETFs earlier in the year and they're gaining popularity? Have you seen a shift in that conversation?
Yeah, I really have. I think people have put zero to bed in Bitcoin.
Really?
People don't talk about that anymore. You have Larry Fink talking about Bitcoin on CNBC. You have Bitcoin ETFs being the most successful ETF launch of all time. I think people realize that Bitcoin is here to stay. Now the questions are more about how do you value it? What is the percentage in a portfolio? Where do you take from in the portfolio to allocate to Bitcoin? From our perspective at Bitwise, the allocation by advisors into the space is going exceptionally well, and I see it accelerating.
Something you used to hear a lot was between 1% to 3%. Is that still kind of the base case for a lot of people?
So the new 1 to 3 is like 3 to 5. It's actually upticked. We're seeing more people make more significant allocations, and that makes sense if you tie back to what we originally talked about. If you now don't think it's going to zero, then it's okay to make more than a token-sized allocation, more than a 1% allocation. And if you do a portfolio optimizer, it's going to spit out numbers that look a lot more like 2.5%, 3, 4, 5% than 1%. So that's increasingly what we see.
Do you ever talk with advisors, or do they talk with you about statement risk and this idea, maybe an older one now, but this idea that they're perhaps more comfortable seeing something like MicroStrategy on a statement versus Bitcoin itself?
Yeah.
Is that something you talk about, and how has that shifted since the ETFs?
No, that's still very true. That's still very true. And it's true for all of crypto. I would say it's probably true for MicroStrategy as well. That sort of perceived risk of how this will look, not what it actually is, but how it will look in certain circumstances, I think keeps a lot of people on the sidelines. The flip side of that, which you actually see in the ETF flows, is even when the market pulls back significantly, as it has since March, ETF flows are still pretty solid because you have to have high conviction to allocate. We're still in that space. You have to have high conviction. Some people don't feel quite comfortable about it. But look, it's a vast improvement from where we were 2 years ago. 2 years ago, we were talking about FTX.
Very true.
Now we're talking about 3 to 5%, and we're talking about pensions allocating.
Wait, that was 2 years ago, the FTX thing? Was that 2 years ago? Jesus Christ.
I think we're doing okay. But that statement risk is still a very real thing.
Is it just time in the market? And, we've heard from Morgan Stanley now, but as the other wirehouses start to kind of turn on that function, what would turn that around a little bit more?
I think it's mostly time in the market. I mean, we've been on this improvement path for 10 years. It's accelerating, not going backwards. I think the market may be on hold right now because of the uncertainty around the election. I think regardless of what happens, it's going to be a great Q4, but I think we need slow down allocations. But mostly it's just the passage of time. Look, this is not dissimilar from, I remember when gold or commodities first came into the ETF market, people wanted to see those things seasoned for a year or 2 years or 3 years before they got comfortable with it. Bitcoin's just on that journey, and I think it's going faster than most other assets.
And on that journey, as we start to see that play out, let's go with MicroStrategy, because I just mentioned it, but do you expect to see kind of a rotation out of, I think for MicroStrategy in particular, kind of a higher beta play on Bitcoin than Bitcoin itself, especially in recent months. But do you expect to see a rotation out of a stock like that into, say, the Bitcoin ETFs?
I think on a proportional basis, that's probably true. Some of the people that would have natively been comfortable in MicroStrategy will become comfortable owning Bitcoin itself. But I think you have to think that the entire market is lifting as well. So I think all tides will lift as more people come into this market. I think MicroStrategy will do just fine. But for sure, that was sort of ETF-like exposure before there were ETFs. Now they're ETFs. They're side by side. They're running in parallel. Again, I think a rising tide lifts both boats, but proportionally, more money is going to flow into these ETFs.
Mr. Rude Puts, thank you for being a member for 32 months. And yes, time flies when you're having fun. Let's party. 32 already, dude. 32 months. You're crazy. Thank you so much. He said, I remember it as it was yesterday. Perfect. Appreciate you, buddy. Thanks for being a member of the channel.
Tell me more about the election as a catalyst. Bitcoin rode a big wave of momentum earlier this summer when Donald
56 just puts it on the table. AJ Mine style. 41 months. Perfect. All those ramen noodles later. Appreciate you, buddy.
Trump made his overtures, toward the crypto industry. It seems like that's fizzled out a little bit. Mm-hmm. Like maybe the outcome of the election, whichever way it goes, is perhaps not the strong catalyst for the Bitcoin price medium term that people thought it would be. What do you think?
I don't think the election matters for Bitcoin. I think the election happening matters for Bitcoin. In other words, I think people perceive some uncertainty. They don't know what to expect. They don't know, will it dive if Harris wins? Will it soar? So they're just like, I'm not going to touch it. So I think the election happening will matter for Bitcoin. I don't think who wins or who loses is going to determine. I think it's going to go up either way. As you move away from Bitcoin to Ethereum and then down the chain of crypto assets, those are much more exposed to regulatory risk, regulatory decision making. And there I think the election outcome does matter. But for Bitcoin itself, all that happens is we get to November and beyond. And I feel pretty confident at least that will happen.
Okay, that's all for Crypto World.
Interesting. All right, shout out to CNBC television for that. All right, moving on to video of the day. The Fed meeting today will send Bitcoin into madness. This is with Lynn Alden. She's actually very educated in the whole Bitcoin space. Let's see what she's got to say over here on Altcoin Daily, guys. That like button. Appreciate you for hanging out. I'm going to speed this up to 1.2 as soon as they get into it. Let's do it.
I mean, I think that $1 million Bitcoin is in the cards.
Today I sit down with macroeconomist Lynn Alden.
Because I do think that Bitcoin could be as large or larger than gold.
About what's next for Bitcoin and the stock market.
I think we're entering another upward liquidity cycle after really like 2+ years of kind of being range bound in liquidity.
We discuss the Fed rate cuts and what comes next. If we only get a 25 basis point rate cut, do you think we'll see a sell-off in markets, even though it's supposed to be a good thing? Also, Lynn gives her real take on altcoins.
Right now, Ethereum's got a bigger market cap than BlackRock. Solana's got like a bigger market cap than State Street.
And watch today's whole interview as Lynn shares her best investing advice. What's the best piece of investing advice you ever received? Click the like button to support me. And let's start, Lynn, with your background.
My back.
All right, we're gonna bump this up now. Yeah, you guys, I know her voice definitely doesn't match her appearance at all. And then, yeah, I don't know. Anything's acceptable in 2024. You know, is what it is.
Background is engineering initially, and then I moved into management for a while, and then got more into finance. So now I do public financial analysis. I'm also the general partner at Ego Death Capital. So kind of a lot of hats over the years.
What is the main mover of markets? Is it global liquidity?
I think in the current regime, global liquidity is the main one. Different market environments over time have had different main movers, but I think that right now liquidity, which is driven by multiple different things, including fiscal deficits in the United States, but I think liquidity is probably the main mover currently.
What's your macro outlook, given that we're about to see rate cuts potentially?
So I'm kind of looking for a potential rotation that's similar to the 2002 to 2007 period. That was the last time where a lot of global capital was stuffed into U.S. markets. So strong dollar, highly valued equity markets, emerging markets struggling for a long period of time. And as the U.S. Encountered a recession and then they cut interest rates, it kind of softened the dollar, and then it caused this kind of virtuous cycle for emerging markets, and capital kind of came out of that, and they went on to have a very good several years. So I think that we have a similar market environment to like that period. This is the kind of the first rate cut in a while, which kind of opens that catalyst for that rotation. So I'm kind of looking to see if there's follow through with that or not.
So 2002 to 2007, stock market rose, and then the American economy got stronger. That's what you're saying, and emerging economies got weaker.
So which period
You said similar to what we saw in 2002 to 2007. I just wanted to clarify what that means for traditional markets.
Right. So that means I believe it's the opposite. It's basically that the emerging markets had been weak starting really in the late 90s, because emerging markets have a lot of dollar-denominated debt. That's where they get a lot of their financing from, and it's often not even lent to them by the United States. It's lent to them by lenders around the world that accumulated dollars from all their surpluses of various capacities. They lend them to emerging markets, and if you imagine, like if you took out a house and your mortgage was in Swiss francs and the Swiss franc doubled compared to the dollar, you'd be in financial problems with your house, and maybe you're getting cash flows on the house that are in dollars, but your liabilities just like doubled compared to dollars. And that's really what happens to emerging markets when they borrow in dollars, and then the dollar has a big, strong cycle compared to most other currencies. They get squeezed, their corporate sector, their government sector. And so that was happening throughout the 90s, particularly the late 90s. But when the US weakened in the early 2000s, that actually gave an opening for emerging markets to have a really strong period. And throughout the rest of that decade, like that kind of 2002 to 2007 period, the U.S. economy did go on to recover from that recession, but it wasn't like the leader strength-wise in the world. Basically, the BRICS. That's actually where that name came from. The BRICS. It was such a popular, powerful place for a while. All these different emerging markets. They were kind of the core drivers of the global economy for that decade. And eventually, global financial crisis, and eventually, in the 2010s, we entered another stronger dollar environment, and so emerging markets have been in kind of another pressured time frame for quite a while, and this is kind of the first opportunity in a while for that to potentially rotate. So we have to see if there's follow through.
Well, now they're all going to hell. You guys are awful.
And for the U.S., everybody seems to be expecting a 25 basis point rate cut. Some people are even saying 50. If we only get a 25 basis point rate cut, do you think we'll see a sell-off in markets, even though it's supposed to be a good thing?
So potentially, because it right now is priced almost 50-50, like the market's not really sure which one they're going to get. Every time a new economic data point comes out, it kind of changes the probabilities for that. So it would only, I think it would only really be meaningful for markets if it came out differently than the market had priced by that day. The other factor is that their language around what they intend to do. So it's not just what they do. Like you can have a hawkish cut, which is that you cut, but then the language around the cut indicates that you can't necessarily expect to cut the next time, or maybe not as big as you think. Or it could be a dovish cut, which is to say they cut, but then they indicate that they're firmly going to keep doing it. So there's both the actual action itself, and then there's also like the follow through, the language around it.
If you were Jerome Powell for 1 year and you could do exactly what you wanted, what would you do rate cut wise for the next 12 months?
Yeah, there's two answers to that question, because in one sense, I think that the fundamental algorithm that they work with doesn't make sense. So for example, I don't think central banks should set interest rates. I don't really believe in price controls, and they set price controls for the price of money. So I kind of fundamentally reject the whole concept. But if I were Jerome Powell and I had a dual mandate of trying to maximize employment and trying to keep inflation in check, I would probably do mild rate cuts as the data come in. I think he's basically trying to balance his mandates. I lay more blame for kind of some of the current situations on earlier heads of the Fed. So during the Greenspan era, the Bernanke era, that's where I think that they could have done significant things differently. But ever since the global financial crisis, I view a lot of this as like locked in now. So I think that I would not really fundamentally do much different than him. I guess the one thing I would do differently is I'd be more transparent about the deficit being an issue. During the pandemic, basically the central bank is supposed to be independent. And during the pandemic, he made the rare move of saying that the economy needs more fiscal support. So, he can only do monetary policy, saying we need more fiscal support. And we got that in spades, and, we eventually got inflation from it. And now that we have ongoing very large fiscal deficits, whenever he's asked about the deficit, he basically says it's not my area to comment on. Instead of, if he was being more symmetrical with his kind of, occasional public recommendations, I think it'd be prudent for him to say, look, it's really hard to do my job on inflation when you're running 7% of fiscal deficits, compared to GDP in a non-recession environment. Like that's a source of where a lot of this inflation is coming from. But he's kind of too now he's suddenly going back to never wanting to talk about politics, even though he has in the past called for more fiscal support.
I want to talk about Bitcoin, but last question on traditional markets. Stock market is coming off of all-time highs. With the rate cuts, do you see the stock market virtually going up for the next year?
I don't have a strong view about the next year. I think the stock market is rather expensive, especially the large ones. When the stock market's strong, people often assume it's like very risk-on behavior. The ironic thing in this case is it's kind of a bubble in risk-off assets, which is to say that there's not much interest in cyclicals. There's not much interest in emerging markets. There's not much interest in Bitcoin from kind of the broader space. There's not really an interest in those types of assets. Gold has outperformed the S&P 500 over the past 3 years, mildly. If you kind of look at S&P 500 priced in gold, it's been this slow rollover. The names that are doing really good in the stock market are the trillion-dollar profitable monopoly tech stocks that are basically the low-risk stocks. Costco is trading at 55 times earnings. It's like this bulletproof blue chip company, and every investor says, I don't want to touch banks, I don't want to touch energy, I don't want to touch emerging markets, I don't really want to be in anything cyclical. I want to put all my money in big cap tech and Costco and stuff like that. And that's actually, and the funny thing is that gets dangerous, because not that Costco is going to have a problem, but you can have a scenario where it goes down from 55 times earnings to 35 times earnings, and the stock underperforms the fundamentals. So right now, I think a lot of this stock market doing well is actually ironically somewhat risk-off behavior. I'm a little bit more interested in the less expensive, choppier areas of the market, whereas I am somewhat concerned about these big, expensive areas that are, I would say that many of them are bid to price levels that don't really match their fundamentals.
Lynn, you are a Bitcoiner. Can you talk about your journey into finding Bitcoin?
Sure. I found it multiple times. Basically, it kind of takes multiple touches with it usually. I knew someone that was mining it on her gaming computer back when you could just do that. And I thought, oh, that's neat. Maybe I should do that, because I had a decent graphics card, and I was like, maybe I should do that. Never got around to it. Then a few years later, I had another one of those bull runs, and I was like, maybe I should buy a little bit of it. I looked at the exchange at the time, and they were really sketchy looking. And I was that second one would have been in 2013, 2014, 2015, something like that. And I was looking at the exchanges, and they were really sketchy looking. And I was like, I gotta put more time into this to make sure I don't get scammed. And again, I just didn't. I had life going on, and I just kind of didn't get back to it. When it had the big bull run in 2017, I had a couple interactions with it. One was I was an engineer at the time still, basically running technical procurement for an engineering facility, and suddenly graphics cards doubled. And I was like, why are graphics cards doubling? And one of our engineers was like, oh, that's Ethereum. And I was like, so what's Ethereum? And then so I did this whole research thing. Okay, what's going on with Ethereum? What's going on with Bitcoin? I wrote my first public piece about the space in November of 2017, and I said basically that the tech was very interesting, but that I thought that it was rather euphoric at the time. And of course, over the next month, like it soared into the top, and then had this prolonged bear market. What I try to do this time though is not forget about it. All those prior times, I would kind of see it and think it's cool, and then kind of just forget about it. But after this was like the third time of doing that, I'm like, okay, I'm not going to make the same mistake. So during the bear market, I kept following it. And then that's, especially during the COVID crash, like that March 2023 sell-off, when it started to come out of that is when I bought in pretty heavily. And I've been bullish ever since.
And you don't have to get too specific, but is it 5% of your portfolio, 10%? How much conviction?
So I have some public portfolios, and I keep it pretty manageable there. Like I'll do a 5% allocation, and then during a bull run, as it grows into like a double-digit allocation, I'll kind of like rebalance it back down. Because a lot of people just kind of follow that portfolio, and so I just by default, it's kind of like the.
So I tell you guys I'm buying it, and then I sell it on you guys as you're all buying in.
The benchmark is a fairly stable portfolio, just spiced up a little bit. For my own allocation, it's double-digit percentage. It's a rather large allocation. Part of that is because I bought in with conviction, but then also just because it's outperformed most other assets since I've owned it, and therefore it appreciated to become a rather large position. So a lot of my position is just from not selling. But then in addition, because I'm a general partner at Ego Death Capital, we invest in Bitcoin-related startups. So I also have venture exposure that is kind of indirectly tied to Bitcoin as well.
Do you put how much credence do you put in the 4-year cycle for Bitcoin? And then I want to pivot to that. The fourth year is coming up next year, 2025.
So I put less emphasis on that than others. I mean, obviously over time, the halvings are important because the new supply coming to market is relevant. So as that goes down, that is relevant. But I generally view global liquidity as being more impactful. I've done analysis. Actually, I have a report coming out with a colleague, and we did analysis of liquidity correlations, Bitcoin versus global liquidity, and then also other assets compared to global liquidity. And it does turn out that in any given 12-month rolling period, Bitcoin is more correlated with global liquidity than any other of the major assets that we do. So stocks, bonds, gold, foreign stocks, things like that. They're not, many of them are just to varying degrees correlated with liquidity, especially stocks. But Bitcoin is the most correlated with liquidity. And most of those highs and lows are associated with liquidity rising and falling. And the two major components of liquidity, the way I measure it, one is basically the rate of global credit creation. And then the other factor would be the strength of the dollar relative to other currencies, which is relevant for what we talked about earlier, which is that a lot of countries in the world have dollar-denominated debts. That's kind of the unit of account for a big part of international finance. And so whenever the dollar is strengthening, that's actually putting a lot of pressure on global liquidity. Whereas when the dollar is weakening compared to other major currencies, that's actually pretty positive for liquidity. So I think a lot of the correlations that people associate with the 4-year cycle are actually liquidity, which kind of is overlapping with it, even though I do think that there also is some relevance from the halving.
And you believe global liquidity is increasing next year. Where does that put Bitcoin?
As a base case, I would expect higher. I'd say next 18 months or so. It's hard to time things precisely. We are generally seeing, as the Fed starts to cut interest rates, we're seeing a softer dollar. It doesn't mean it's going to be a straight line, but basically some like the catalysts that kind of really propped up the dollar are kind of fading. And the dollar, the United States runs a structural trade deficit, which for most currencies would be very weakening for their currency over time. But the United States is also the global reserve currency, so we have all those dollar-denominated debts around the world, and all of that represents inflexible demand for dollars. So there's this balancing point. Whenever we tighten monetary policy, we actually are pretty capable of strengthening the dollar. Whenever we loosen monetary policy, that tends to be pretty dovish for the dollar. And so because I expect a somewhat weaker dollar, and I expect probably going back to more global credit creation by next year, probably the year after that, I think we're entering another upward liquidity cycle after really like 2+ years of kind of being range bound in liquidity. So Bitcoin has followed this liquidity cycle pretty closely. And my base case over the next 18 months is probably for both liquidity and Bitcoin to go up. Although I don't really have a view of, say, the next 3 to 6 months. I mean, these are processes that take time to play out.
Over the next 18 months, if you would you share your base case, bear case, and bull case for Bitcoin price?
So a lot of that is just psychological. I'd be surprised if we don't see 100K. I mean, that's kind of like a back of the envelope rough expectation, where I would think that the cycle would be, I would consider the cycle stunted if we don't reach that. But other than that
Agreed.
kind of rough level, I mean, there are easy scenarios that you can imagine. Over the next 18, maybe 24 months, you can have a wall of liquidity and institutional buy-ins and some sovereign announcements, and you can get the crazy numbers.
I think even 120 is going to be hard to break. That's just my opinion. People are just going to sell. You know what I mean? There's psychological numbers that people are not going to want to, they're going to want to take profits pretty much.
Or you could, barely get over 100K if you make it there. So I don't
Right.
really have views because I didn't have to predict not just liquidity, but like what individual nation states will do, or like, whether there's gonna be like another MicroStrategy that decides to come in. So it kind of comes down to like one billionaire's decision or not, right? So rather than price targets, I try to just have a sense of direction and kind of long-term prices that make sense, not any one cycle.
Lynn, what's your view on altcoins like Ethereum and Solana?
So most of my writings have not been very constructive toward altcoins. I have been bullish on stablecoins for years. Obviously not the price, but the volume of stablecoins that is going to exist, and that has played out. So ever since I wrote that, the size of the stablecoin market keeps growing. That's basically a very strong use case. Obviously, blockchains that enable stablecoins to run are therefore going to be relevant as well. I tend to be more bearish on these more speculative use cases. So while I think, for example, digital collectibles are a thing, they become these bubbles and then they just diffuse for long periods of time. Or the DeFi bubble, a lot of it was just kind of speculative aspects to it. So while I do think that there's a use case for basically anything that allows stablecoins to run or allows stablecoins to be like traded or leveraged for other things, I mean that there's relevance there. I think tokenized assets are relevant. So for example, when like a hotel in El Salvador wants to like basically crowdsource some of its funding, it doesn't really have local depth of markets. The issues like basically what is a security on some sort of chain that people can buy into is useful. So basically, I'm on board with the real world assets tokenized thesis to some extent, on board with stablecoins, but I'm not very bullish on long-term value accrual for a lot of these underlying chains. And one thing I pointed out is, I mean, like for example, when ETFs came onto the market, they really took share from mutual funds. They're just, for the most part, a better product. But when you look at all the big ETF issuers, BlackRock, Vanguard, State Street, Invesco, if you add their market caps together, they're actually not that big, right? So their assets under management are very big because ETFs are so successful. But the actual value of the companies themselves, they're multi-billion-dollar companies, but they're not like trillion-dollar companies. And right now, Ethereum's got a bigger market cap than BlackRock. Solana's got like a bigger market cap than State Street, last I checked, or bigger than Invesco at least. I think even some meme coins are bigger than Invesco. And so I think the size that some of these have grown to is arguably already kind of forward projecting what their value accrual could be, basically the size of large companies. So I'm not saying that there's no use case for these things, and there has been a lot of interesting research come out of some of these areas, like roll-ups and things like that. I generally am not very bullish on long-term prospects for most other things.
The Bitcoin ecosystem and projects finally being able to be built on Bitcoin, does that change your outlook in terms of value, market cap for the Bitcoin network?
For the most part, no, because I think that the biggest kind of market that's being addressed here is good money, right? So we live in a world where if you add up all assets together, it's something like 900 trillion. Like it's a pretty comically big number. And of that, like the bond market is like hundreds of trillions. The real estate market is hundreds of trillions. The equity market's like 100 trillion. The currency market is like 100 trillion. And then there's like, gold is under like 20 trillion. Fine art is some trillions, is basically the whole kind of long tail of other types of assets. And basically, if you have a really good new money that the world accepts over, a 20, 30, 40, 50-year period as it kind of reaches whatever its total addressable market is, I think that's a massive market. That's like a huge market that could be bigger than gold, for example. Whereas I think that, the other things that can be done with it are interesting, but, they're more like $1 trillion opportunities, not like $10 trillion opportunities. So, I mean, one of the examples is Guatemala timestamped its 2023 election into Bitcoin, right? So they basically all people cast their votes, and then at any given table, I think there's like 25,000 vote counting tables throughout the country, and they vote their X number of votes that they're kind of assigned to, and then the vote counters sign it and observers sign it, and then that sheet is scanned and then immediately timestamped. It's hashed into the Bitcoin blockchain. So it's not actually stored on Bitcoin. It's stored in some other any sort of other servers and backups and things like that. But the point is that you can then point to the Bitcoin blockchain and say it was hashed into Bitcoin at this time. It was like timestamped, and that this specific thing was not altered from that time period. And it was put in like literally minutes after all those people signed it, and they did that for the whole nationwide election. So
Wow.
that's using Bitcoin for its basically being the most immutable database in the world, regardless of it being money. It's a database. So there are non-monetary use cases for it. Including some of these other layers that could be built out. And they're interesting, especially from a venture standpoint. They can open up interesting investment opportunities. But for the network itself, I view the biggest use case is basically globally portable store of value and international value transfer settlement, basically.
Kathy Wood is on record that she believes Bitcoin will hit $1 million by 2030. What are your thoughts on that?
I mean, I think that $1 million Bitcoin is in the cards because I do think that Bitcoin could be as large or larger than gold, and I think gold's probably going to increase its market share as well. I mean, it's been doing well in recent years, and I'm still bullish on gold. So I think that both gold and Bitcoin, I think, are going to have a little more prominence in the years ahead. And Bitcoin at $1 million is only a 20 trillion dollar market cap, 21 trillion fully diluted. So it's not really that big of a market, especially over time when you include another 6 years of inflation and money supply growth. Maybe $1 million by 2030 is a little bit aggressive. Like if I were to put my kind of guess hat on, I'd probably give myself till 2035 or something. So I don't really have specific time frames like that. But I do think that that's a level that would make sense for Bitcoin to eventually get to if it continues to be like the global leader in digital money and portable store value.
Given everything we've discussed about macro in this conversation, what would you say is the best buy in markets today?
I mean, long term, probably Bitcoin. I think that anyone in traditional finance that has no Bitcoin position should have a Bitcoin position. Obviously, it doesn't have to be like all in, like degen, leverage long, but like not having any Bitcoin, I think is the easiest low hanging fruit to fix. Even if the thesis doesn't work out, if you got 3%, and it's fine. But if it does do some of those really bullish outcomes, it's good to be on the right side of that, even with a small position. And aside from that, I think there's like other assets out there that I think could do very well, but they all have counterparty risk. So for example, I think that Chinese equities are super cheap right now. Nobody wants them. And I'd say there's a high probability that 5 years from now, they've done very well from these low levels. But then there's some minority position where you literally just get zeroed out from owning them. Kind of like if Americans owned Russian stocks, a little over 2 years ago, those companies are still there, but your claim on those assets is basically just sanctioned away. So any investor has to take that into account. So I think that there are a lot of opportunities in equity around. But I would say that Bitcoin and Bitcoin Venture are certainly where I'm focusing a lot of my time on.
Would you name any of the Bitcoin Venture that you're invested in?
Well, so at Ego Death Capital, we have a public portfolio. So it's Lightning infrastructure, it's Bitcoin brokers around the world. It's we basically look into multiple different things. So anything that involves helping people buy it, helping people trade it, helping infrastructure for spending and things like that. So we have exposure to Fedi, which has a wallet that is more private and more distributed than we see from many other wallets. So there's a lot of opportunities out there. We tend to focus on the less speculative use cases, so less about like trading and leveraging for the most part, although trading is still relevant, and it's more instead about kind of like long-term utility and long-term, kind of like still basically the basics of the ecosystem.
Given everything we've talked about in macro thus far, what would you say is the worst buy in markets?
I mean, for example, I'm not bullish on Costco at 55 times earnings. It actually reminds me of, so in the late 90s, everyone, of course, knows the dot-com bubble. But what they're less familiar with in many cases is if you look at like Coca-Cola stock, they were trading like 50 times earnings. And Walmart was trading like 50 times earnings. So a lot of these kind of blue chip consumer staples or consumer retail, that kind of thing, they were also trading at very high valuations. And over the next 10, 15 years, both Walmart and Coca-Cola continued to grow their earnings, their revenue and all that, but their stock prices went like sideways for like 10 years. Because even as their earnings doubled, their earnings multiple, their price to earnings ratio got cut in half. They went from 50 to like 25 times earnings, which is back down to like reality. At some points they even went lower, like Walmart went into the teens for a period of time. And so there's stocks like Costco, which is really hard to justify how this is going to perform long term. It doesn't mean it has to be bad next year or even the year after. It's already stayed this high longer than I would have guessed. But I would just say that investors have to be cautious about overpaying for something that's very good. Something can be great, and you can turn it into a bad investment if you buy it for like twice of what it's worth.
Lynn, a lot of millennials are trying to buy a house, in the next few years. Is there going to be a good time? Do you think housing prices will go significantly lower?
I think probably not, but I do think that over time their affordability will improve. Kind of my expectation of houses, kind of like actually what we saw with, say, Coke, where the stock didn't really necessarily crash, just kind of like chopped along for like sideways for a long period of time as everything else caught up to it, like fundamentals caught up, the money supply caught up, things just kind of eventually became cheap through time rather than direction. And I think a lot of houses might do that, which is that they don't do very well in inflation-adjusted prices, and they don't necessarily crash. And obviously, some of the cyclical markets have already come down quite a bit from their kind of peak highs, but a lot of the linear markets are holding up well or even hitting new highs. But I think that their inflation-adjusted performance is probably not going to be great, and that over time, wages will kind of grow into them, and new supply will kind of keep over time chipping away at some of that. And then also, I think we'll have moderately lower interest rates, which increase the affordability a little bit. But I do think that's going to be, I do expect that probably be like a pain point for quite a while, this whole housing affordability issue. I think that's unfortunately probably going to take a little bit more time to unravel.
All right. We're going to end it there. You guys can finish watching on your own. There's really not much left. I did want to mention, though, Anthony Pompliano. Let's see. Real quick. Let me go to it. Anthony Pompliano, he put out a new podcast last night, or not a new podcast, but him and his wife do this podcast. I started listening to it. As you can see, it was like 40 minutes in. It's actually a pretty good conversation. If you guys are interested in going to watch this, I definitely recommend listening to it as your day goes on. I'm trying to put this in the chat. There we go. And yes, for the record, I was trying to find out if she was born a man, but I don't think she is. I think she's a woman. That's what I was doing. Anyways, let's recap things. Just for all of you guys in the chat, anybody just joining, Bitcoin $59,931, getting closer to 60,000. As you guys know, we broke 61 yesterday, but briefly. All right, we got Ethereum at 2303, Solana 129 bucks, ADA 33 cents, the XRP at 57 cents, Caspa 16.8, Near Protocol is at $3.97. Litecoin 63.45. We got DOT over here at $4.06. AVAX 23.27. Dogecoin's at 10 cents. BNB at 541. Toncoin at $5.51. See if anything changed over here. Looks to be HNT still biggest loser of the day, down 6.6% to $6.57. We got CKB at up 6.7% at a penny and a half, a little bit more. It's 1.7, right? So in between a penny and 2 pennies. Flashbang over here, Fear and Greed Index again is at a 45. If anybody's just joining, obviously Bitcoin going to 61K probably pushed this needle pretty good, but I'm assuming we're going to see some sort of little bit of a pullback. Let's see, Lithium has not been actually took a little bit of a run down the last 24 hours. The miners' profitabilities are going down as the days go on. 86 bucks for the AL1 Pro. Obviously people trying to recoup some money because the whole Ice River debacle, you know, paying three times more for the Bitmain miner versus the Ice River miner, and then pretty much the same terahash. So it's kind of a kick in the nuts, and I'm sure everybody is panicking to try to get their money back from these units, but is what it is. Nothing you can do about it. New shitcoin on the market today, Aleo, I don't know how you're supposed to say that, to be honest, but this is all over GPU mining. So if you guys are into this coin, have at it, do it at your own risk. I don't know anything about it. I think Panda was talking about it yesterday, if I'm not mistaken, but guys, that is gonna do it. Hopefully you guys have a great, happy, and safe Wednesday. I gotta get back to daddy duty. Kids need to get to school. You guys have a great day. I will catch you guys in a little bit. I'm actually dropping a video in about 10 minutes, so have fun checking that out, and see you guys tomorrow morning. Peace out and have a good day.
She don't talk to her, we don't talk to her.
I love titties.
Perfect.